Hi traders, this is Dr. Gregory McLeod from the Elite Traders University, and welcome to another edition of the weekly Forex forecast, Bears versus Bulls, for the week of December 18th, 2022. And so we're going to get started, and we're going to go through the upcoming the trade setups and economic news, which you can use in your trading, okay? So let's go ahead and get right to it, and we'll go ahead and we'll first of all get out the risk disclaimer on your screen. First of all, we're going to get that out there to you, and just make sure you read and understand all the risks associated with foreign exchange trading. And this is brought to you by the by Elite Traders University, and I started Elite Traders University back in 2014, and so we help traders succeed and to be successful. And so look forward to, you want to come back and visit the site, elitetradersuniversity.com. We have a real cool special going on right now where we're helping people pass the Surge Trader auditions. We partner with Surge Trader, and we've got many client testimonials of people going through our program and being able to get 25 or 50 or 100,000, 500,000, $1 million accounts, and they're able to trade it successfully and able to keep 90% of the profits. And we're sponsoring that, and people who join the course will get the $100,000 audition. So you want to contact, go to 4 Pillars to 6 Figures, learn more about that, and set up talk to a member of my team on how we can help you be a profitable trader and have accelerated funding. Okay, so with that said, let's get into my market heat map, which is an arrangement of currency pairs by percentage change. The tiles behind me, green is an uptrend, red is a downtrend, but it's not just a tool for finding out about the market, but it also has a lot of other tools to help you to support you to find to give you information. Remember, Gordon Gekko says that information is the most valuable commodity that he knows, right? So getting that information, whether it's financial streaming news, or whether it's technical analysis, or whether it is any type of holiday or economic announcement, you can use my market heat map in order to give you the answers that you need right at your fingertips. Okay, so let's go ahead and get right to the to that. We're going to go to the monitor display. There we go. And goodbye, Mr. Title Screen. Okay, so let's go to my market heat map. You go to www.mymarketheatmap.com, and you can actually get a 30-day free trial, and you're gonna get a special lifetime access for a special low price that we offering that as well. But let's go ahead to go to the login, and then we'll go ahead, and this is the heat map right now. It's about 1 a.m. Eastern time, and it's still Asia, and things are still a little cold. So these all instruments on the heat map, but we break them down into currencies, commodities, and crypto, as well as indices as well. So right now we have the yen basket in full strength, Aussie dollar at the top of the heat map, and also UK oil, and the euro is actually up as well. Okay, but that's not what we're going to be looking at right now. We're actually going to be looking at the economic calendar. The economic calendar is one of the missing pieces for a lot of traders, because they make the mistake of trading and not say, well, I don't trade the news, so I'm not going to look at it. And the problem is that the news, even if you're not looking for the news is still going to happen and going to impact you one way or another. So we're going to be looking at this week starting December 18th, actually we're on the 19th right now. And what I do is I go to the high impact items, and what I'm looking for, I know there's a lot of information here, but I'm basically looking at the flags to know what currencies are going to be in play, which ones are going to have the most volatility. Volatility is like the wind and our sails for a sailboat. Okay, if you have no wind, we're not going anywhere. If you have too much wind, you have a hurricane, well then what happens that you get swept away by the wind, right? You really want that to happen. So what you want to do is to look at these as ways of finding where the volatility is, where the action is going to be. And the first thing we have up is the RBA, Reserve Bank of Australia, at 7:30 p.m. Eastern time. That's a meeting minutes. They already had the rate announcement and they hiked interest rates, but then they're gonna the minutes will tell us what they actually discussed and why they came to their decision, and will give us some indication on whether the news that the RBA will raise rates in the future, or maybe that's all they're one and done, or maybe they're finished for the first part of 2023. So we get what their future, what the future of interest rates in Australia, they're going to be. Now, interest rates are one of the most powerful things that moves currency the most. Okay, when they hike interest rates, and so something like this can make the market extremely volatile. And we can see from the heat map, the Australian dollar was already up. Okay. So let's go to Forex majors. Let's take a quick gander back over there. And we see Australian dollars up 0.26%. Not incredibly strong, but still at the top of the heat map. Why? Because we do have an announcement coming up tomorrow, or today, and that's why you're going to see some early positioning in this currency pair ahead of the announcement. And we also have the euro up 0.21%. We see other currencies are flat. They're gray. Gray means we're neutral. Anything below 0.2% is considered neutral, and these are way below neutral. But anything less than 0.20 is also going to be, we say, is downtrending and is active too. We can look at that as a possible trade. Okay, so let's go ahead and go back to the economic calendar, and we'll come back to the technical part, which I know you guys are just dying to hear about. But the economic calendar, we're looking at the high impact items. And we can see there's a lot of Asia stuff going on. We have Australia, which is part of Asia. China, we have the People's Bank of China interest rate decision. And even though we don't trade the Chinese renminbi, or the yuan as it's called, which is the Chinese currency, interest rates in China impact the Australian dollar and New Zealand dollar because they are the largest trading partners with China. China is the largest trading partner of Australia and New Zealand. So when China does some type of monetary policy, or if their economy catches a cold, well, Australia and New Zealand catch the flu. Why? Because China is a very big economy, and when something happens in China, it directly impacts Australia and New Zealand. Like recently, maybe a couple of years ago, we had an instance where there was contaminated milk coming from New Zealand to China, and China banned New Zealand milk imports, and that ban caused the New Zealand dollar to plummet several hundred pips in just a matter of minutes. So that's how powerful the Chinese economy is linked to Australia and New Zealand. So any impact, so if we see maybe a hike in interest rates, it could have some additional knock-on effects to the Australian dollar going in, and the New Zealand dollar going into Monday. We also have in Asia, we have the Bank of Japan monetary policy statement and the Bank of Japan interest rate decision, and they're probably going to keep rates unchanged at negative 0.1%. So they're one of the few economies in the globe that still maintains negative interest rates, and the Bank of Japan really doesn't want a strong currency, because a strong currency would directly be negatively impact their economy. Their economy is very dependent on exports, and maintaining a cheap yen or a low value yen keeps their economy moving forward. Excuse me. A little stuffed up nose there. Okay, so we have the Bank of Japan rate decision coming up as well. The yen pairs will probably be in play. And also we have a Bank of Japan conference that spills over into Tuesday, and the minutes on the same day as well. So lots of Japanese. So look at the Aussie yen, pound yen, euro yen will be in play. On Thursday, we're going to have the Thursday, December 22nd, 2022. We have the 8:30 release of the U.S. GDP, or gross domestic product. Gross domestic product is a backward-looking indicator, but it actually shows the amount of economic activity in the United States. Good, strong number is usually good for the economy. May not be so good for the U.S. dollar, though. Depends. If it's a negative number, it usually means it'll be good for the U.S. dollar. Okay, because dollars are spent to buy stuff, to buy investments, to buy gold, to buy oil, to buy commodities. Okay, and if the economy is contracting, well, then people are no longer spending dollars. They're hoarding dollars into. They're looking for yield. They're looking for bonds. They're looking for safety. They're looking for yields. They're looking for safety, so they buy bonds, and that movement causes a rise in the U.S. dollar as it becomes this safe haven. Okay. However, if we have a good GDP number, it could be negative for the U.S. dollar. If it's too positive, like there's a Goldilocks scenario, right? If it's too strong, that means that the Fed will have to raise rates sooner and in greater increments in order to contain the growth, to keep inflation from popping its ugly head, right? So it can't be, if it's too hot or too cold. You say, well, Greg, GDP came out good and the dollar rose. Yeah, if the GDP is too high, then the dollar will rise because of the anticipation that the Fed will have to raise interest rates, jack them up really high in order to fight inflation. Okay, and that's the medicine. After being the U.S. economy getting lots of free money, lots of all kinds of stimulus loans and things like that, a lot of money being circulated around, low interest rates. Well, that creates inflation. To fight inflation, the medicine that the Fed is giving the sick patient, meaning the U.S. economy, is higher interest rates. Higher interest rates are like that really bitter tasting medicine that, now all the medicine tastes like candy and syrup. But back in the day, they gave you some castor or cod liver oil or something. It tastes like crap. It was the worst tasting stuff. It was like poison, basically. And they gave it to you when you were a kid. And you held your nose and you got better. Okay? So that's like the nasty tasting medicine that Jerome Powell is trying to give to its patient by giving them these high interest rates. It's like, you want to get rid of this fever, this inflation, take this. And the patient's fighting, no, we don't want that. We want, your chronic, and then it'll probably make you sick. You'll have after effects. But then, hey, all of a sudden inflation is gone and the economy is normal. So that's why they're talking about in England, hey, if you guys are willing to go for it, we can knock out this inflation thing in about 6 months. And when they said that, the pound shot up because everyone knows what the medicine is going to be. The medicine is high interest rates, high interest rates. And they jack it up to like 9-10%. Well, guess what? Shops start closing down. People can't borrow money. People go bankrupt. And that's what's really going on, people. When they tighten the money supply, it puts a lot of people out in the street. And guess what? There are fewer people buying things, and it lowers inflation. I know it's a tough pill to swallow, literally. But that's what, if you look at the mechanics of what is actually happening, it will cut inflation. It will cut wage growth. It will cut job growth. Because they lower interest rates to increase job growth. By raising, it's very difficult to hire more people, and your borrowing costs are high, and your finance costs are high to even sell your products, to sell your cars, to sell your refrigerators, to sell your appliances, to sell those items. In order, higher interest rates means that people stop buying, will buy less. If they buy less, prices go down. In order for prices to go down, people have to lose their jobs. People have to stop hiring. So that's what they're doing, right? That's why it's really important for you guys not to be the sheep that are the pawns in this game that happens it's been happening ever since I was born. You know, they get so high and then they raise the interest rates. I remember waiting in gas lines when I was a kid with my dad. You know, when they closed his plant down, he was laid off, you know, due to globalization. I saw all that too. And that's why I'm so passionate about teaching people how to trade and to get free, so you won't be a pawn. Oh, sorry, Bob. You did a great job, but, you know, we're cutting back, you know, reduction in force. We got, you know, redundancy in force here, so we got to lay people off, you know. That's how it is. And you go, okay. You know, like you do every year or every 5 years, right? Aren't you tired of that mess? Why don't you stand up for yourself, enroll in a course, learn how to trade, unplug yourself, and opt out of this, right? Just like you want to opt out of the junk mail, opt out of this junk economy stuff that's going on over and over and over again. And the thing is, once you get old enough to figure it out, it's too late, right? In the younger generation, they don't know. And you know, some of them are getting smart now and figuring it out. But, you know, there's the others that say, oh, wow, this is the way life is supposed to be. But if you press the button to make money and then turn this stuff off and go to sleep, then you're out of the system. And you're one less pawn that they have to worry about, okay? When Social Security runs out, you don't care. When they close the plant down, you don't care. If your relative gets laid off, you can help them. You can help your church. You can help your family. Why? Because you make money, right? But if you sit on your money and you do like the parable of the talent, you got that talent, that money, and you stick it in the hole in the ground, you bury it. They're going to say, they're not going to say, well done, good and faithful servant. They're going to say, you wicked, lazy servant. You could at least put it in the bank and got usury, which you can't even get interest here. But the other guys, they traded. They took their 2 and they traded and made 2 more. They traded the 5 and made 5 more. Okay? And you are sitting there going, well, I don't know, I got hurt last time. I don't think it's going to work this time. Like I was talking to some guy on the phone. I'm like going, oh my God, really? Oh, your wife won't let you? Why don't you grow a pair? Just grow a pair. Grow a pair. Do something for you to help your family. Be a man. Okay? Eve, you know, Adam got kicked out of the garden listening to Eve, okay? Because he disobeyed God. So a lot of you guys are held back by, you know, females. You're great people. I love females. I love women. But men, you're called to be leaders in your house. You're called to be the provider in your house. Okay? And I tell you what, when you've got food on the table and lights are on and your rent's paid because you can trade, you know, they're not going to say nothing to you. Okay? They're not going to say anything to you because they're going to look up to you and they're going to respect you because you stood up to this economy stuff that's going on right now. That you set them free and you set your family free. You were a man. Okay? So I just say be a man. All right? All right. And if you're a lady, be a lady. But you know, my target audience is actually older men, 45 and above, who's been trying to do this stuff for like 20 years, and you can't make it work. Well, guess what? I made it work, and I help people make it work. I help people get results. I know what you went through. I know what you're going through. I know how I can help you because I'm the doctor, and I've got the answers. Okay, in the commercial, back to what's going on here. GDP, we talked about that. Canada has their GDP as well. Now the dollar, I was looking to the euro as the anti-dollar to trading the euro and trading the dollar Swiss has been nice. I have several students who are really doing well looking at dollar Swiss. Dollar Swiss was highly manipulated with the Swiss National Bank, you know, unpegging the Swiss franc to the euro, and that created a whole bunch of stuff, like 1,000-point moves, and it dislocated the currency market because they made a move without telling other central banks. So the other central banks are pissed off at them. So I think the Swiss is, you know, can be played on the dollar side with these dollar announcements where you see the American flag. Okay, Canada. We have a gross domestic product coming out at the same time. There's an 8:30 news cycle, and there's also a 10 o'clock news cycle. And even if there's no news released at 8:30 or 10 o'clock, you will also see some turnarounds in the market, because you're looking at lunchtime, or no, not lunchtime, you're looking at near the European close about that time. Excuse me. Okay, so that covers it. We don't have very many announcements. I mean, we're going right into Christmas week. Remember, there's going to be lower volatility, illiquid moves. A lot of the guys on the street are going to be on they're going to be on holiday or on vacation, and so you might see some tax loss selling on the S&P. You have lots of contracts expiring, rolling off. So just be very careful. Just because you have the week off because they gave you 2 weeks for vacation, whoop, or 1 week for vacation, whoop, because you're not trading, making enough money to actually make your own vacation, right? Anyway, another dig, I know, but I'm just trying to keep you awake that this is why you're doing this, why you're watching me, is because you want to be free. So remember, like after Friday or around Friday, you really need to shut this thing down, because the market can be really, really, really hazardous going into, we have Christmas coming up on Sunday, and probably Christmas Monday, where people take that Monday off as well. And so it'll probably be a very thinly liquid time. Then you got New Year's coming up and New Year's Eve coming up as well. So, keep your stops tight and your friends closer during this holiday season. So, Merry Christmas to you. Now, let's go ahead and get right into the technical picture. And basically, the things in play are, I'm looking at the Aussie dollar, some yen pairs, the dollar and the CAD, and then we'll look at the S&P as well. So, let me go ahead and pull up a chart. Okay, now, let's look at the euro. This is back up. This is where, I know we kind of skipped a week. But I know, like, a lot of my people are still watching they found my analysis from the last couple of weeks very helpful. How I had my box and how I said we had a breakout, and we did have an extension. We actually went up back to this old high back here. We got really close to that. We didn't quite get to the entire, but it was bullish. We were bullish out of the breakout of this consolidation, and we broke, tested, and then rallied very big, almost 127 pips since we last talked, right? Ultimately, we'll get here, but I think we might get a little bit of a pullback, maybe back down to the 382. I think we've extended. We had this big run, and we'll probably take a little bit of a break, and the 38% retracement comes in at 102.73. We also have an evening star kind of pattern forming, and this is kind of bearish. So we're looking at so bulls versus bears. I'm looking at at this to be bearish. I'm bearish the euro. Okay. So bearish. I think it's going to go down. I think it's ripe for a drop. Well, I would be wrong if we broke the high. Now, yes, yeah, you said, but Greg, you have a target up here. I go, yeah, but prices don't move up in a straight line. We might get some up and some backfilling. We, come back, maybe even retest the box. We might not come back that far. May come to 104.34. I'd be short. Okay, let's go ahead and let's look at the U.S. dollar index, the DXY, which is the opposite, the mirror image of the euro. And the U.S. dollar, the DXY, is a basket of currencies versus the U.S. dollar. Ticker is DXY. You can't really trade it, but if you know where it's going, you know where the other major pairs are going. And we can see that I said that we go down. We didn't quite get down to this low, this 38% retracement down here. This was at 101.54. We did get down, though. This is where I said we would rally. We did rally against the trend line, and we did drop. We didn't drop as far. We got down to 103.46. Still a good move, about 100 pips to the downside, and now we have a bullish morning star pattern, and we broke back above this key level of support where we peaked below this area of congestion, and then we jump back up. And so that is You know, as long as we hold this new trend line, the U.S. dollar is poised to continue up. And so, like, see, if we get a break below, then we come back lower. But it looks like a bulls versus bear for the U.S. dollar index. I am bullish. Rawr. Oh, okay. Now let's look at the pound dollar, GBP USD. I think we have, and that's also coming down as well. We did rallied a bit, and drop back down. I think eventually we get here, but we might come. Taking a fib. We have support down at 119.49. We may come back and retest this area before bouncing higher. I mean, we were only able to make a little bit of a high. I mean, we came right to this area and then continued to drop. We got bearish engulfing, but we do have haramis here too, right? So we might have some support here. Might see a little bit of a bounce from the 121.30 area. Maybe come back and retest 123.33 to give us a head shoulder, and then a drop. The bulls need the one spot 24430 high to be taken out for this run to continue. I mean, this could just be the bottoming of a range, and we're maybe just sitting there. So we might get a little bit of a bump higher than a drop. Bulls versus bears. I'm constructively bullish, but I'm like neutral. If I had an animal that was neutral, maybe like an owl or something, that would probably be something I would do. But I'm actually cautiously bullish on the pound. Okay. Now let's Aussie dollar. That's the big one. Lots of announcements coming up around that time. And like, you could trade other things, and other things but if you're looking for the big volatile move that's going to show that we're in play, here is the Aussie dollar. And we did rally up to the 68.96 area. Found some resistance in this kind of a zone here that was formed. And so we have this kind of not green though, more like red. Price rallied in there, but we're hitting all kinds of support here on the daily. So dailies, we have a harami right there. We can see some type of a bounce action. So I'm actually kind of cautiously bullish on the Aussie dollar, as long as we can hold above 66.73. However, if we break this level, then we could probably go down a little bit lower, down to 95, which is about 200 pips lower. Let's say those minutes come out and they say, oh, well, we raised rates, I think we're good, right? If they do that, well, then we can see the Australian dollar come down. But if they say, oh, well, inflation is still a problem, well, we need to continue to be vigilant and to keep rates, keep pushing rates higher. And then you can see a move. This kind of flag formation is kind of bearish. So this may do this. It might go up and then go down, right? Because there's so much congestion. There's all of this in this big supply zone or below the 200 simple moving average. If this thing rallies, it may be a good area to sell the rally. Or if you're a little more risky, play this rally up to the 50% retracement, 67.92. Because this thing has to fight this whole big red candle, and there's lots of guys that are like, they'll sell more into it. But you're gonna have these guys who got short, will probably say, look, I got short here, I made some money, let me take some off the table. Let me peel back some profits. As they peel back profits and start buying their positions back, that's going to create a relief rally, or what we call a dead cat bounce, okay? And don't write me if you're PETA or you're against animal rights or something like that. But the stock market, they call it a dead cat bounce. Even a dead cat will bounce if you throw it down hard enough. So we got this bounce, and we're getting this rally. Now it's just a bounce, which means it's not a full-on retrace, right? They may only rally just a little bit against this market tide, and then continue down. Excuse me. All right. So that's Aussie dollar. Let's go ahead and take a quick look at maybe euro yen or pound yen. Let's take a look at the dragon, because there's lots of Japanese data coming out, and so we're gonna look at our daily chart there. And you can see we're just chopping around here on the daily. Just not a whole lot of. Let's see if we can. I'm just gonna back it out to a weekly. And you can see where this is really this topping pattern where we rallied. We got as high as 172.30. That's huge, right? And then, but we're in this congestion where we're not able to break to a new high. We're not able to break to a new low, and so we have this kind of, going into the holidays. We've got this type of pattern here that we have like an abandoned baby here, like a drop, and usually with a gap like that, we get some type of rebound on where price comes back from dropping like that and forming this like abandoned baby sort of kind of pattern. So we look for we can see a route. If we're at 165.11, we can look for even a rally up to 166, maybe at least 100 pip rally from this area, right? And then we can drill down on that to a 4-hour to see where this thing might be basing and maybe ready to take off. We can draw a trend line across the top, look for a close or a break above a high, look at like 166.38 as a trigger, and look for a move back up. So bulls versus bears. Japan really would like to keep a weak yen, and they may do some things to some funny business to make it weak. Okay, so I am bullish. Moo. Okay. All right. Let's look at some other yen pairs. Just one other yen pair, maybe like, to see if they're all on the same page. And we can look at maybe AUD/JPY. AUD/JPY. We're also this is also a daily. And if we go to the daily, we're hitting all kinds of support. In this 91.22 area, multiple touches, and so I'm sure that rate announcement's going to be the catalyst for a breakout. We have downward sloping, and then we have flat. Now, this this is like a descending triangle, and usually descending triangles are bearish. In fact, you can see the topping kind of like head and shoulders, multiple top. And this flag here, usually like what we see on this side, that was bullish. And like, this thing has a mind of its own. I don't know what the colors to be, right? So it's bullish on the way up, and then usually on the way down, it creates symmetry where it's actually bearish. On the downside like that, right? So if we break this support, we could see a big collapse, big move down, right? And usually the yens will collapse because there's something external that the Bank of Japan can't fight. For instance, a missile launch or some type of attack or some type of war or something that happens that is like some type of natural disaster usually triggers a big sell-off in the end, right? A stock market collapse. We may be into something like that. So look for a trigger this week. Could be something weird. Because this is a very ominous topping pattern. We went up, chop, 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 chop. No new highs, no new highs. Lower high. We have lower low, same low. And so the bears are like backed up. The bulls are backed up. They're pushing, and there are a lot of people are going to get sucked into a long and probably get taken. Okay. Let's take a look at Bitcoin, BTC USD. And the key here is BTC USD. Well, the National Bank of Bitcoin has not raised rates. So if they're not raising rates or creating, a way of creating value, and the Fed creates value by reducing the amount of money in circulation, such as burning. When they burn coins, that's the same thing as raising interest rates. When they burn coins, but it's like, who's going to burn their coins to support Bitcoin? Oh, maybe when some Bitcoin gets lost, it could be something like that, right? Or like when FTX goes under, could that be like a burn of the Bitcoin maybe? But anyway, we are in a very strong downtrend. We had a rally to 18,140. Evening star patterns, a bearish 3-candle pattern composed of a bullish candle, indecision, long wick candle, and a bearish candle, and then we're stacking down. But we do have a Harami that's slightly bullish, but we would probably look for this to continue down and to eventually break this 15,000 area, because there's so much downward pressure on this. Our trend line would go here, across that. So we have a rising trend line, a descending trend line, and something is bound to happen that's not too good for the bulls. And so bulls versus bear, I am bearish Bitcoin. Okay. So let's take a look at that. Let's go ahead and move on to okay. Let's go to the S&P 500. SPX 500. S&P, let's go to a daily chart. And you see we've got rejection right there. We took a fib from the daily high that we had back on August 16th, 2022, down to the swing low on October 13th, 2022, like a day after my birthday. And then we can see that price rallied to a low and then rallied up to the 786, exactly to the within a few pips of that, few points of that, and rejection at the 200 moving average. And now we're making a lower low. We made a higher high, a lower low. We would probably need a lower high before this. Usually we have like a channel. Here's our trend channel on the highest point on the trend channel, like that. So we usually see a sort of a rally up before we see a drop. Okay, so that's probably what we're going to be looking for. Or maybe it's a little bounce, a bounce on Monday. If it's up on Monday, it's going to be like down Tuesday, Wednesday, Thursday. If it's down on Monday, then we might have a good week. But if an up Monday, people should be very afraid of an up Monday. Okay. In fact, let's take a look at CNBC Hinkle futures. Futures are flat. Oh, they're up. Up on Monday. Okay, guys. I would be a seller into this going into the week. Up on Monday is usually it's down Monday and then up for the rest of the week. But usually an up Monday usually means that that Tuesday, Wednesday, we're gonna end up going in a big downhill. All right, let's take a look what's going on around Asia. All red in Asia, right? Europe, they're negative too. See, they're already ahead, a day ahead. They're already into their day. Okay. I'm sorry. I'm watering. Got some allergy things going on right now. Let's go ahead and get back. All right. So S&P 500. Let's look at the Nasdaq, NAS. NAS 100. We can do there. Okay. Similar. We had an inverted head and shoulders, and we had a little AB, an A, B, C, and now we're like 1, 2, 3. Looks like we can see a drop. Again, we've got a little bit of a hang there, so we might see a little an up move tomorrow. But this may be a rally that you sell into. Bulls versus bears. I am bearish S&P and bearish on I'm bearish this. Short term up. Today, maybe tomorrow up. But the rest of the week, I think we'll be down. Okay, especially against the wick and against the 200 simple moving average, and an overall downtrend that we're in the market right now. Lower swing highs and lower swing lows. We have a lower high, a lower low, a lower high, and we're stair stepping our way down. Okay, so let me go ahead and get my bear on there. Okay. All right, so that's the we did NASDAQ, and we did the S&P, we did Bitcoin. I'm also going to do oil. I'm going to go US, UK 100, no, UK oil. Okay, Brent oil. Okay, and that was a red zone, right? I might. Okay. Daily, and let's go to weekly. And okay, we're looking at that high 37.79, come back down to the 200. Now, if people are, if the whole goal of the economy to heal is to really slow down economic growth, oil is required for growth. So we can see oil continue to slide. Technically, we might see a rebound, short-term rebound, but again, we're stair-stepping our way down in some type of a trend channel that is very well defined with lower swing lows, and we have lower swing highs on the top end. So any rally in this would be we could look at a rally up. We can buy, but don't think it's gonna go all the way back to the old highs, right? They have too much. They have too much oil, and then these high interest rates are affecting, purchasing of heavy equipment, of trucks, of transportation. It's when inflation impacts everything. Ever since the rates have been higher, we've seen lower commodity prices. Okay, so we may see a rally and then a drop. Let's take a look at gold, XAU USD. And we can see that we a nice bounce off the this triple wicks at 16-17-37 back on October 17, 2022. We continue to move up on the weekly chart with higher highs and higher lows. We might be taking a little bit of a breather though, because prices kind of topped out near the 1800 area. We see a little bit of a pullback, but the trend is still intact. And looks like we could, continue to have a rally up. So on gold, bulls versus bears, and then we can see that there's our kind of our trend there that we continue to move. And our break from here did not go up there. It petered out for lower high, and then that would be our warning sign to no. But it did rally for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days out of that. So there were some good gains there, but we didn't get back to the old high. But here we see we bottomed out, multiple bottoms, showing that buyers stepped in this area, and then they start taking it back the other way. So we can start constructively bullish. Got a little flag there. We could see the old high, swing high of 1879 coming into play. Okay, for gold. All right, ladies and gentlemen, I want to thank you so much for joining me for Bulls versus Bears, the weekly Forex forecast. I want to invite you to come on out to Elite Traders University and check us out. Check out my market heat map. A powerful tool with all kinds of almost $9,700 worth of bonuses. Also, you want to come over to the funded trading accounts up to $1 million of Surge Trader. You can actually go to our link that's scrolling above. You go to bit.ly/Surge Trader Elite. And also, if you want to check out our education program and how we help traders become profitable in a shorter amount of time with less stress and overwhelm, go to www.4pillarssixfigures.com. My name is Greg McLeod, Dr. Greg McLeod of Elite Traders University. It's been my pleasure to serve you. Let me know if you have any questions. You can email me directly at greg@elitetradersu.com. Talk to you later. Cheers. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!